So, JoAnne, we are getting a lot of kind of mixed data. We just showed some stats earlier where 23% of people here in the U.S. have gotten at least a dose, but at the same time, cases are kind of back up to those August, September levels that had us very concerned. What does that mean for the recovery on a macro level, and where do you see, what sector do you see showing that recovery first if it is going to happen?
Well, Frank, clearly it's a tough thing for folks that are suffering from COVID. And we are seeing cases rise not just in the U.S., but Europe and Asia as well, and really globally. And that is a concern. In the U.S., though, we do have an advantage, a very large advantage, which is the number of vaccinations taking place. And that number is accelerating. So, in the U.S., it's sort of a race between the vaccine and the coronavirus itself. But, because we're vaccinating so many people, right, we're going to come out of this sooner than elsewhere. So when we look at the macro recovery, what we're going to see, and we're already seeing it, is the U.S. really lead the world. We do expect the global macro recovery to be a tailwind later on. But right now, it's pretty clear the U.S. is going to come out of this first. We're seeing, a lot of consumer savings pent up, waiting to be spent. It's starting to come back. And we're seeing, for example, the trade deficit expand because the U.S. consumer is buying more. So that's a natural outcome, and it's actually a sign that the U.S. is recovering more quickly. So yes, it's very concerning that cases are rising, particularly globally. But here in the U.S., the vaccination pace is really ultimately going to win that race. So we could have some rough sledding ahead for the next few weeks, but consumers do have a lot of savings they're sitting on, and they're starting to spend it already. In terms of sectors, Frank, you asked, several sectors are already seeing an uplift, obviously. But, look at the consumer spaces. Go back to traveling spaces. A company like Casey, people on the road, stopping in at the convenience store. TJ Maxx, people are going to want to go out and they're going to want to start shopping again. So consumer spending-oriented sectors are really going to see a lift. But of course, as I like to say, don't forget about tech. Even though some of them are expensive, there's an awful lot that are still cheap here and are going to get an extra boost from the infrastructure plan whenever that comes along, and that will take some time.
Yeah, a lot of government stimulus, whether it goes directly to consumers or possibly to industry, that could be coming up. As we look in our current environment, a lot of shifting and investing, how important are stocks that pay out dividends right now? And are there any sectors that you're particularly targeting for dividend plays?
Frank, it really depends on the investor, right? We have clients who are looking more towards future and so appreciation. We also have clients who are in their retirement phase and they want to really have a portfolio set up for them that delivers some yield. So, what we do for clients is build portfolios of individual stocks. We customize them depending on the person's particular needs. So dividend opportunities now are really broadly spread. You can find good dividends in reopening plays like the banks, for example, insurance companies, but you can also find good dividends in some of those longer-term technology plays. Cisco, for example, is a good place to look. IBM is an interesting play right now with a relatively new CEO and their efforts. Qualcomm, has seen its stock pull back and is right in the middle of the move to 5G. And if the infrastructure plan does pass, there's going to be a lot of spending on broadband. And, anybody involved in those wireless infrastructure plays like a Qualcomm or a Qorvo that doesn't pay a dividend, but Qualcomm does. So there are a lot of opportunities for the dividend play, both in reopening and also in the longer-term tech plays.
JoAnne, one thing they really caught my ear, you mentioned financials being one way to play for dividends, but just long-term, as rates continue to rise, a lot of people are turning to financials. How do fintech stocks and fintech companies play into this? With the reopening, do you see people still leaning on fintech to make their buying and financial decisions, or do people just go back to the traditional banks?
Oh, no, I think that fintech is really going to play an increasing role. We're even hearing some of the presidents of the Federal Reserve banks talk about the importance for conventional banks to build up their technologies, to make sure that they're ready for a new reality where more mobile banking is taking place. So, companies like nCino is one we really like. Q2, which enables mobile banking for smaller banks, regional, and also starting to help some of the larger banks. So these aren't dividend plays, but they are really right in the middle of the change in the financial technology that's taking place.
Shepard Smith here. Thanks for watching CNBC on YouTube.